Most people, if not everyone, want to achieve financial freedom. This freedom can only be earned by either having multiple sources of income or through owning valuable, appreciating assets. Either way, one has to make wise and well thought decisions before investing their money or time. For those interested in building wealth through assets, it's important to note it's not as easy as it sounds. It requires conducting thorough research to know the best assets to own and the best periods to purchase. It's also important to decide the routes you want to take, whether the high risk, high gain path or low risk, low return route. Conceptualizing these two pathways will assist you in determining your initial investment risk tolerance and portfolio management. With this in mind, this video looks at different classes of assets, some high risk and others low risk. By diversifying your portfolio and spreading your investments among the 5 following assets, you stand a high chance of creating wealth in 2021. Number 1 is going to be stocks and equities. No one can confidently say where the stock market will head in 2021. However, that doesn't alienate the fact that buying stock assets can be one of the fastest ways to build wealth. It is all about buying the right stock and at the right time. They are also convenient assets to own due to their flexibility. You don't have to incur any additional costs, and all you have is a percentage of ownership of a business that someone else is running. So how do you buy stocks? To buy stocks, first you need to open up a brokerage account. You need to research the best and licensed broker, fill in your details and complete the approval process. From there, you're going to be required to fund your account to purchase your desired stocks. So what's the best stocks to buy? As indicated earlier, few, if not anyone, can tell if a stock asset is going to go up or going to go down. The only thing you can do is conduct the best research to ensure you are buying the right asset at the right time. That being said, there are clear favorite stocks out there for 2021. After the astronomical rise in tech stocks last year, maybe this is the year investors will be looking for alternative stocks. It would be advisable to assess some alternative stocks that have the potential to follow the expected economic growth in 2021. As Forbes.com put it, some commodities such as agricultural products and industrial metals appear to have a good reward-risk trade-off in 2021. It would also be prudent to analyze the biotech industry and look for undervalued assets. With COVID-19 vaccines performance too early to tell, it would be a good idea to take position in some of undervalued biotech stocks. In here, you might find a good entry that could have a significant return. Number 2 is bonds. Now, bonds usually refer to the low annual returns. However, bonds are one of the least risky assets you could buy on the planet. They involve the investor lending some loans to a borrower within a certain period of time. Some bonds may include periodic payments paid to the investor before the initial investment is paid back in full. Borrowers can be in different forms, from businesses to governments. The most famous bond is from the US government that is commonly known as the US Treasury bond. The asset comes with many different maturity periods depending on contract terms. These include Treasury bills that have terms between 1 to 12 months, Treasury notes that mature in 2 to 10 years, and Treasury bonds that mature in 10 to 30 years. Other than US Treasury bonds, you can also buy bonds from other countries. However, the US bonds are said to be one of the safest in the market. As for other countries, it is hard to tell or assess their credit worthiness. So why would you opt for low risk, low gain bonds? The following are reasons you might choose bonds over other assets. They can be used as a hedge against the stocks, as they tend to rise when the stock market is going down. You can have more consistent streams of income than any other classes of asset. They are much less volatile. Although this may mean lesser gains, it also means that your investment is properly protected against huge losses. They are good for rebalancing your asset portfolio. So how do you buy bonds? In buying bonds, you have 2 different options. You can either buy them directly through an individual, which in most cases is tiresome and technical for beginners. The second and advisable option is to buy them through bond funds, which is much easier for those trying to buy these assets for the first time. Number 3 is real estate. Real estate has been on an upward trend in the last decade. Since the financial crisis of 2008, which devastated the housing market, the industry has since recovered and has been hitting new highs in the past years. Although no one knows when this market will correct, it would be a good bet to assume that the upward trend will continue in 2021. This makes real estate asset investing a rational financial decision for those wishing to create wealth by capitalizing on this growing market. There are different ways one can invest in this market. One way involves owning the hard asset, and other includes owning intangible real estate assets. The two can be divided into the following: hard property asset acquisition. This involves the traditional and common route of acquiring housing properties and renting them for the monthly income. You could own different classes of properties, including apartments, vocational homes, and multi-family dwellings. It's also important to note that these assets may attract maintenance costs and tax expenses. That's why this type of investment may require investors with a large pool of capital or funding. You could also look for like-minded investors who may be willing to share the initial investment. This will help you spread the costs and risks of owning a property. However, it is more than getting some people interested in buying real estate assets. You are supposed to look for people knowledgeable in the industry. You could also hire an asset management company at a fee, where they are tasked with the role of handling tenants' issues, managing rent payments, and incurring the maintenance costs. There is also an old school option of buying a real estate asset, waiting for price appreciation, and then selling it later. This is normally called house flipping. Although not lucrative as it used to be due to cost restrictions, you could still make decent profits. Real estate investment trusts. This is for investors less interested in owning and managing hard real estate assets. A REIT is a company that owns and manages real estate assets and make payments to the asset owners. In other words, they're basically like the mutual funds of the property industry. They use money from investors to build and develop real estate and pay back 90% of their taxable income to the shareholders. REITs can be divided into different sections. Public traded REITs, these are operated like stocks where the company is open to public trading. This is often ideal to stock market investors wishing to expand and diversify their portfolio to the property market. Private REITs, as the name suggests, it's only open to private investors. These investors must be accredited and have a net worth of $1 million and above, or $200,000 annual income in the last 3 years. These assets require experienced investors as there is little to no broker fees are also considerably high, but that is compensated by the high expected returns. You should probably exercise some caution in the real estate market in 2021. Although it is an advisable asset to own in times of uncertainty, real estate grew astronomically last year. This may mean highly inflated prices. These expected foreclosures as a result of COVID-19 will also affect the market. With all that in mind, it's advisable to wait until the last quarter of 2021 before taking a position. Number 4 is going to be gold. Even in ancient times, gold has always been regarded as a store of value. More interesting is that it appreciates with time even when other asset classes are stalling. This explains why it is regarded as a competitor to stocks and a hedge against inflation. As a result, it is one of the most demanded assets in the world. If you have decided to buy some stocks, it's always advisable to take a position in gold. This is because of the low correlation to the stock or economy performance. In other words, if the stock market dipped, you will still have gold to stabilize your portfolio. You might take different routes to taking a position in gold, such as including buying the physical gold and holding, buying gold bars and gold coins and gold accounts, and holding gold ETFs or investing in gold mining companies. However, if you're a small investor with a limited pool of capital, the best bet would be to opt for direct methods of investing. This includes buying gold bullion coins, bars, and other physical gold materials. This path is more viable to small capital investors who can't afford to spend a significant amount of their portfolio in paying the fees and other expenses. Number 5 is peer-to-peer lending and equity crowdfunding assets. This is like investing in bonds, only that it's a little more risky but the potential to high returns. Although less of a physical asset like real estate or gold, peer-to-peer lending can still act like an investment asset where you put capital and expect some gains. These investments are high risk as the borrower creditworthiness is much less compared to governments or businesses. However, this risk comes with gains collected from charging high interest rates on these loans. These lending platforms also allow you to analyze the borrowers to calculate your risk before handing them the funds. Also, important to note that these platforms are relatively easy to open, maneuver, analyze, and make your investment. If you want more than handing a loan to potential business owners and want to be part of the business, then crowdfunding might be for you. In this case, you're buying a part of the business by availing some funds. Some of the companies might also be advanced and offer shares in crowdfunding websites such as AngelList and CircleUp, depending on the funds you have donated. If the company becomes a success, you get decent returns, and if it fails, you lose part or all of your investment. Some of the success stories in crowdfunding industry came in 2016 when Cruise Automation, a company developed through crowdfunding, became a huge success. As indicated by Investopedia.com, General Motors bought the company in 2016, creating profits for investors and also adding legitimacy to the world of crowdfunding. From peer-to-peer lending and crowdfunding, an investor can take part with just a few $100s. For those with much more substantial capital, diversification is always advised, whether in lending different borrowers or crowdfunding multiple businesses. The bottom line: as expected, buying the best wealth building assets isn't as easy as it sounds. It requires thorough analysis to choose the best investment at the right time. As you've seen, some investments might be good, but the timing has to be perfect. You don't want to buy an overpriced real estate asset or a stock, as it might lead to some losses. Also, important to be aware of your risk tolerance depending on your capital size. For those with considerably low capital, bonds might not be the best due to low returns, and hard property might not be ideal due to high initial investments. Nevertheless, whether in a low risk or high risk, investing in assets require technical and fundamental awareness of the market and economy. Portfolio management and diversification are also imperative if you really want to create wealth in 2021.